Hello, everybody, and welcome back to Contracting Business Basics. Today, we are going to be doing learning module number 2, Building a Financial Roadmap. I'm your host, Lori Rawlings, the Executive Director of the Plumbing and Mechanical Contractors Association of Oregon, Southwestern Washington, and the northernmost parts of California. And we're bringing this series to you in conjunction with the Mechanical Contractors Association of Western Washington. Now, I want to just go over a couple of housekeeping notes before we jump into this learning module. First is our standard disclaimer. We're not lawyers, we're not accountants, we're not tax professionals. So the idea of the series is we're giving you some high level overview information about things you're going to want to keep in mind as you sit down to start a business or you're taking over a business. But for specific legal and tax advice in particular, you will need to consult with a professional. The other thing about this module in particular, building a financial roadmap, we're going to be breaking it into smaller chunks, a series of shorter videos, because there is a lot of material to cover here, and it can be overwhelming if you try to sit down and watch it all as one long video. So we're going to break it up into smaller chunks that are a little easier to digest, so you have an opportunity to stop and think about what we've talked about in each video before moving on to the next one. So with that, I would like to turn it over to our instructor, Hank Brancasio. Hank, welcome back.
Thanks, Laurie. Glad to be back as we go to learning module number 2. This is the big one of all the learning modules. This one is the most time consuming. And so breaking it up into smaller recordings will very much help anybody who's watching this to understand it a little bit better. And we will try our best to go patiently through this because there is a lot of information. I would also potentially suggest that if someone is sitting through this and they don't have a strong financial background, grab your financial manager, have him or her sit through this with you, or your bookkeeper, somebody who really does understand financial stuff, because there's a lot of things here about running a business, none of which include piping or plumbing or building construction. So let's kind of go through this. Initially, we're going to do some PowerPoints, then we're going to jump to the Excel spreadsheets, and then we'll come back and finish up some PowerPoints. Objectives. So we're going to try to give you a very high level view of general financial terms that you're going to hear from bankers, from accountants, from people in the industry or who run a business. We're going to look at a financial pro forma, and we'll explain what that is. We're going to go through what makes up labor costs, what makes up other costs in your business. I think most people look at labor costs and think, well, the union, I get paid, as an example, $40 an hour plus benefits. And they think that's all of my cost. And that's a part of your cost, but it's not all of your cost. And there are many other things that need to be calculated and figured into it. There's a reason mechanical contractors or plumbing contractors may be paying somebody with benefits $80 an hour, but they're charging a customer $140 an hour, because there's other things that are in here that need to be accounted for. We're talking about business expenses, vehicle expenses, labor, and then finally we'll finish this up with cash flow. And so when you run a business, and I don't care if it's making widgets or mechanical contracting business, plumbing business, you still have to have cash flow. And you might have a very profitable business. You might have a business where you do excellent work. You might be the smartest steam fitter or plumber in your market. If you don't manage your cash flow, all things come crumbling down. And so we'll talk about that a little bit. We're going to start off with trying to give you some terms. So we're going to talk about direct costs. So labor to install material on a job. Everybody understands that. Everybody can get their arms around, well, it took me 40 hours to install this bathroom, as an example. that's cost that goes against the job, and it's direct labor for the job. That's easy to understand. Indirect cost, though, is there as office support. So here's an example. A dispatcher for service is a cost. It needs to be accounted for because it's a business cost, yet that person doesn't touch the project. That could be a supervisor. If it's a bigger mechanical or plumbing business, that needs to be accounted for. Consequently, that would be considered an indirect cost. That becomes a little bit more harder to get your arms around simply because it's not labor charged directly to the project at the job site. Variable costs. So how much material used on a job? That goes up and down. Material is going to change. There are other things that make up variable costs, but we'll talk about that as we get through this. And then fixed costs. So this is kind of important. Regardless of the amount of business you do, whether it's $10,000 in business or $100,000 in business, your fixed costs don't change. So before you run out and build a new building and buy everybody a Cadillac, you better understand that fixed cost doesn't change. So if you have a business, as an example, where you want to have a beautiful office and you want everybody to have their own printer and everybody gets a very expensive cell phone, just keep in mind, when business goes down, those costs still need to be paid. So whether it be insurance, you got to kind of think of it like your house. You have your mortgage, that's a fixed cost. So it doesn't matter whether you're living in that house or you're not living in a house, whether you have 5 kids in the house or 1 child in the house, the fixed cost doesn't change. And so you need to be aware of that. When I first started running a mechanical contractor, this is a crazy number. We had 35 printers in the office. Everybody got their own printer. It was insanity. And that means everybody got cartridges, printers broke, they got out of date. It's expensive. The other thing, like, everybody had a beautiful truck. Well, that was great, except does everybody really need a truck? And so you got to understand fixed costs become important. Variable costs will go up and down depending on how you use it. Even labor for a job, if you're not busy on a job, you don't have the labor on the job. You can have somebody sit at home to reduce that cost. Fixed cost is fixed cost. Once you open that door, it's hard to close it.
So Hank, a term that I often hear thrown around is overhead. And I'm assuming some of these costs make up what people refer to as overhead. Is that true? Where does that fit in?
It's true. And so some of this will be part of that overhead. And we'll talk about that when we get the spreadsheets up and running and we start looking at it. But, some people could say, well, my overhead is my office. And that's true. It is your overhead. Other things could amount to overhead. Your vehicle cost could be your overhead. All of the tools you have could be your overhead. It's a bit of a challenge, especially if you're not familiar with the financial makeups of a business on how this all flows together. But we're going to try to, hopefully, by the time we're done with this learning module, give you a little bit of a sense of what's involved with this.
Great.
Direct costs. Let's just give you some examples. Everybody understands if I buy pipe for a project and I install the pipe, that's material. That's a direct cost to the job. So if I spent $5,000 for pipe, I can put that down. Equipment. Maybe I'm plumbing up a bathroom and I've got $3,000 in plumbing fixtures. That's pretty black and white. That's a direct cost for the job. Here's where it gets a little vague, though. Labor. Now, if it's labor on the job, everybody understands that. But what about, let's say you did some design work on the project and you had a cost for that. Let's say it took 20 hours of design work to design a project. That's still labor that's associated with a project. It's not overhead. I would encourage, as we go through this, the more you can charge directly to the job, the easier it is to account for it. The less you charge to the job and you just throw it in a bucket and you just say, oh, well, I'll just throw it in as overhead, it gets harder to understand really what it costs you to put that job in. If you skip engineering and you skip supervision and you skip project management, if you skip all of these things that were directly related to the job, but not labor on the job, it's hard to really figure out, well, did I make money or didn't I make money on the project? The more I can charge directly to the project, the better off you're going to be. It's just easier to manage that way. Tool rental, whether it be cranes or lifts, subcontracts. Now, subcontracts, if I'm subbing work out to an insulator, as an example, or I'm subbing work out to a general contractor, that you can get your arms around that. I had to hire somebody to cut openings, core openings in a concrete floor or a concrete wall. That can be charged directly to the job, and that people understand that. Permits, safety equipment. It's not overhead if I have to get specialty safety equipment to work it. Now, I did work at one time in a building that they reclaimed mercury. Highly volatile in terms of, it's like you don't want to breathe this stuff. You don't want to get it on you. We spent a lot of money for safety equipment to work on that project. It's not overhead. It was directly related to the project. That's a direct cost. You just got to kind of think a little differently than just looking at it and saying, well, the only direct cost is really my labor to install pipe or put a bathroom in. No. There are other things that are involved with that. And again, the more you can tie it directly to a project, the better off you're going to be, because you'll understand whether you're making money or not making money on a project. Okay, indirect costs for a job. So shop foreman, bookkeeping, service manager, office support. If as your business grows, initially you're thinking, well, I got me and I got a bookkeeper, and that's all I got. Well, that's fine. But as time goes on, that cost is going to go up. And as it goes up, you need to understand it needs to be accounted for. And we're going to show you different ways that you can account for that as part of this learning module. So here we go. Rent, that's easy to understand, or mortgage if you own the building. Utilities, so that could be gas, could be electricity, could be water, could be garbage pickup. Printers, software, computers, all the technology items is all fixed costs. If I buy a printer for the office, if I buy software, if I buy computers, it may not go directly to the job, but somehow you have to account for it. And we'll show you how we do that. Telephones, answering service. If you have a service department, you're going to need an answering service unless you want to pick up your cell phone at 2 o'clock in the morning on a Sunday night. You're going to need some answering service to do that. Support personnel in the office, service manager, a bookkeeper, maybe a controller, maybe an admin staff. You're going to need that support personnel for that. Maybe you've gotten big enough where you've hired a salesperson, and that salesperson is costing you $80,000 to $100,000 a year. That's a fixed cost, and doesn't matter whether they don't sell anything or they sell a lot. You're still going to have to pay those bills. Same thing with insurance, liability, workers' comp. It's a fixed cost, and that has to be accounted for. You can call it overhead, or you can figure out a way to maybe include it as part of your hourly rate, so that every time you do charge time to a job, you're covering those costs. So you hear the term revenue, you hear the term billings, you hear the term sales. Think of it as all interchangeable. It all is the same thing. So in a business, on a spreadsheet, an accountant would call sales and billings revenue, or receipts. It's all revenue. So what is that? What is revenue? Well, it's new projects. If I sell a project for $20,000 and I execute that project, I got $20,000 in revenue. Service calls. If I'm getting service calls and I bill out a service call for $1,500, again, it's all revenue. Change orders. Well, let's see. I'm on a job that's a $25,000 project, and I get a $5,000 change order. Again, that's revenue that you need. So the question is, how much revenue can one tradesman generate? There used to be an acronym or a benchmark that would say each tradesman should generate about $250,000 in revenue. That was many years ago. That number might be a little bit off now, but as you run your business, you'll start to understand how much revenue each tradesman can generate and how much can do. I had a gentleman one time who was a service mechanic, and that mechanic thought he was a really good salesman and wanted to become a salesman. I said, okay. And so we made him a salesman. And after 6 months, I think he had sold $60,000 worth of stuff. And he said, I think I'm doing pretty good. And I said, really? Well, let me show you what it's costing me to have you paid. Now, he was a union steam fitter, I believe. And, if you add in all of the benefit packages, he had a vehicle, he's probably costing me about $120,000 a year. And I said to him, well, you generated 60,000. If you generate 120,000 at the end of the year, I broke even. I didn't make a nickel off of you. And so you need to get your arms around how much, your tradesmen can generate. How much revenue can you generate if 50% of your time is spent finding work? So when you start a business, you are not going to be out in the field working 40 hours a week. It just isn't going to happen unless you want to work 40 hours a week and then go home and somehow work another 40 hours a week at home. A good benchmark is assume that only 50% of your time is being worked in the field. Might be even less than that. Might only be 30% of your time. So in a 40-hour work week, you'll be lucky to work 20 hours a week in the field. The other 20 hours, you're doing estimates, you're managing the business, you're ordering material, you're whatever related to the business, has nothing to do with plumbing a project. So you need to understand that you have to anticipate that I can't generate all of this revenue because I'm not really out in the field that much when I first start off. As time goes on, that will change. But initially, I wouldn't figure more than 50% of your time is out in the field. How much revenue do you need if your business consists of yourself and one office employee? So now it gets a little interesting because you've got an office employee, again, overhead, fixed costs. How much more do I need? So if that office employee is costing you $40,000 a year or $30,000 a year, well, that's another $30,000 you got to cover when you do work and do revenue. Now, I know that many people would say, well, I'm the plumber and my spouse is going to be the bookkeeper. Doesn't matter. You still have to cover that cost. It's not free. She's not working for free. You have to somehow account for it, because if you don't do that, you'll think you're making money and you're really not making any money if you don't account for the work that she's doing or someone is doing in the office, even if it's a part-time person.
Yeah, Hank, and I know we'll get into this in much more detail as we go through the spreadsheets, but I think we can't emphasize often enough how important it is to remember that the cost of somebody who's working in the field, it's not limited to that total package you see on the wage sheet, because there are vehicle costs, there are tax costs, there are insurance costs above and beyond those costs. And it's really important that you have a handle on those costs and that you're charging your customers enough to cover all those costs. Because I think that's a really key area where a lot of new business owners get into trouble because they're not thinking about all those extra costs. I think that's a really important point to remember as we work through this learning module.
I think when people come out of the field and they're not familiar with this end of the mechanical contracting business, the plumbing business, the contracting business in general, most people are a bit surprised, shocked, in awe over all the things that get added into this. And so it's important to understand, and we're going to show you that, what's included in all of this. Margin, profit, not a dirty word. It's okay to make money. If you're running a business, this isn't the Salvation Army. It's not Goodwill. You're not a nonprofit organization. You're here to make money. You're here to provide a service for clients and make money. And that's profit. Now, there's gross margin or profit, money left over after you subtract your direct costs. So let's say you sell a job for $20,000 and it costs you $15,000 to put into it. Oh, I made $5,000. Well, hold on a second. Maybe, because you still got to pay state tax, federal tax, You still got to pay your accountants. You got to pay for insurance. There's still some costs there. So it's very possible that even though it looks like you made 25% margin, you might have only made 2 or 3% when you deduct everything out of it. We're gonna do that, but just for everybody's sake here, let's just look at a simple set of numbers. You sell project sale at 50,000. So you sell a project at 50,000 and it's 20% gross margin. Cost is 40,000. So your margin is 10,000, or it's 25% markup. So just markup and margin, it's just another way to describe it in terms of gross profit you're making on a project. It doesn't mean all of that money's going in your pocket, because you still have expenses you have to take care of. So the question is, if you think you can sell work at 20% gross margin, like this example, how many projects at 20% margin will you need to support your business? That's the bottom line. This is not about, you don't start a business and then go, I'll just start selling work and executing work, and after 6 months we'll figure out, am I doing it right? You don't want to do that. You can do that, but you don't want to do that. A lot of people go out of business a year, 2 years down the road because they realize, I wasn't selling it at a high enough value. I was spending too much money. So let's look at these spreadsheets and see if we can get our arms around this. Okay.
Let's do that. And I think now would be a good time to end this short video and start a new video for the first sheet. We're going to wrap up part 1 of learning module 2, and we'll see you back in a few minutes.